brother, the moderator. I have my moderator from my chapter, Alpha Alpha Theta Sigma, Brother Dante Landry. You got the floor, sir.
So I first want to thank you, our state director, A Bigger Better Business, Sean Parker, and thank you for letting me moderate. And again, I want to thank you, Brother George Smith, and I do want to thank you as well, Miss Cecilia Ford. So what our plan is tonight is to try to answer any questions that you may have about buying a home. Hopefully we're going to hit every part of the process. And if you have questions, so we won't be talking over each other, if you don't mind, if I don't hit your question in there, please make sure and hit me on the direct messenger down there, and I will ask your question. So to get started, I do want to start by asking questions. And I'm gonna let them just jump on in there, George and Miss Ford. So we're just about to jump in there. So feel free to hit me up. So the first question is, hey, how do I know I'm ready to buy a home?
You want to take that first, with ladies first, Miss Ford?
I can jump right in here. I think knowing I'm ready to buy a house is an internal decision that you make with you and your family. It's a huge commitment. Sometimes it's the biggest investment, I should say, that a family will make in their lifetime. So knowing that you are ready to buy a house, it's something internal, it's something emotional. It's something that have sat down and said, listen, I'm ready to advance my family to the next level, which is home ownership. How do I start that process? The best thing is to contact a local realtor, someone that can guide you through the process, because it can be a daunting process. I think when a lot of people think of home buying, they think, first, I can't do it. And you'd be surprised, a lot of people that I have run into in my experience have said, hey, I think I want to buy a house, but I just don't know if I'm ready. I just don't know if I can qualify. The best thing to do is to get with a local realtor. That local realtor will probably come with a toolbox full of different measures and people that you can contact, i.e. a lender, and start talking about how do I qualify for a home.
I'm going to add on to that, Ms. Ford. I will also add on that, so when you sit back and say, I want to buy a home, which is great. And Ms. Ford kind of touched on that. I'm not sure if everybody caught that, but you make sure that you have a competent team with you, right? So you don't want to just take it on yourself. Make sure you have like a realtor. A realtor has connections with and so forth. So you have to make sure that you have a great team behind you ready to go ahead and assist you. I can tell you from personal experience, you don't want to go with a realtor or a team member that if they seem like they have a God complex to you, they're probably going to have the same thing to their partners. So you want to deal with somebody that is you can connect with on a level of buying a home. You can ask any questions any kind of time. You want to make sure you're comfortable in that regard. So then that can actually validate, yes, you are ready to buy a home, and now you have a team behind you to help you.
Bless you.
Bless you. So once I know that I want to buy this home, is there any benefits to me? Because in our fraternity and in our sorority, we have a lot of veterans. Is it any benefits to me being a veteran?
Absolutely, and I'm actually a veteran myself. So you do have the VA loan, which is almost like, it can be looked at almost like a cash offer because it is fully backed by the government. It's not going to default. It is something that is very solid. So that's actually a strong position to come in and say, you know what, I'm a veteran. I have a VA loan, meaning I have got dishonorably discharged because you can't get a VA loan on a dishonorable discharge. So that, like, it kind of works in your favor in that regard. So when somebody sees that, a seller sees that, oh, it is a veteran put it in loan and it's a VA loan, it's got a strong possibility, it's got a potential to go all the way through and not have many, you have some challenges, but not have that many challenges closing the deal. So that's the thing. You want to make sure that your lender, your type of loan or whatever, closes the deal, because they can get you in there, like with anything else, they can get you in there, and then all of a sudden you got a high level, and we're going to talk about this as well, but on a high level, you come in there and they give you a high level scrub of your credit. And then they go ahead and qualify you with that and give you a letter and say, hey, you can go out and buy a house for $300,000. Well, you can take that and out there and give that offer. But what if that firm, they have a tendency of not going through, or they just known not to close all their deals. So now you got to start all over. So you want to make sure, like, again, with a VA loan, you are partnering that with a lender that actually works with veterans as well. And they do have that, they have the rating, and they'll be happy to share it with you. Oh, absolutely. And just make sure you're getting somebody that actually works with a veteran, works with the veteran.
I'll just add to that too, because I think it's important, and we're here to be completely transparent. I know in the market here in Pensacola, Florida, it's definitely a seller's market, meaning you know, the sellers, there's more buyers than there is product out there in the market for sale. It's important, and Smitty touched on this, to have a very competent team. And that really goes a long way, especially when it comes to negotiating an offer with a VA loan, because I will tell you, here in this market again, I mean, shout out to all of our veterans. Thank you for your service. But sometimes sellers look at VA loans like, oh, this is going to be a headache. You know, they're very stringent. They have a lot of guidelines. There's a lot of red tape when it comes to VA loans, and that's because it is backed by the government. The inspections are going to be harder. You know, the appraisal, I mean, they mean what they say. They're not paying a dollar over what their appraised value is on that home. So there is a lot of red tape when it comes to VA loans. But the most important thing is you have a competent team, because in my experience, especially if I have a veteran who I'm representing, I go straight to that seller's agent and I have a conversation with them. I go to the right lender and I have a conversation with them. I want the full package, as if they're fully approved already. We're ready to go. We just ready for the waiting for the inspections to clear, to assure that seller that we're not going to have any issues closing. In fact, we can close in 30 days or 45 days versus some of these VA FHA loans, and have a conversation with that other agent and tell the story of this veteran. Tell the story of, you know, this family, you know, advancing themselves into home ownership after, you know, being renters for so long, or after relocating to this, you know, this new area, and how this area that we're looking in is particular to whatever it is, whatever the story is. Make sure that you relay that to that other agent. I make sure I relay that to that other agent so that they get the warm and fuzzy for me and for my buyers. And that goes a long way. It's been my experience.
And I can also add on, with the VA loan, right? There's different types of loan, and I guess we'll get into that a little later. But anytime anytime my buyers are looking, or I'm actually listing a house, if that house, even though you're not a veteran, if that house is accepting VA offers, you know that's a top-notch house, because you know that seller isn't going to put it on there if they're not going to pass a VA inspection. if the appraisal is not going to be VA certified. So they're not going to mess around with that. They're going to go with cash and conventional loans only. So if you hit something on there, especially if it's tagged, and us realtors, we're able to see that in the system where it's all the type of loans they are accepting. And if the important one for me is if it's accepting VA, I know it's going to be a solid home.
Okay, okay. Brother Sean Parker asks, if I am not a vet, but have been in the military, can I qualify for it without the veteran family being on my loan?
I'm sorry, can you repeat that question, please?
His question was, if I am not a vet or have been in the military, can I qualify for a loan without it being, without the veteran family being on my loan? So basically, can he get a loan without putting that, even though I was in the military?
So if I'm hearing the question correctly, if he's trying to get a VA loan, that is just for VA. That's just for the veterans.
Okay.
All righty. That's something you have to have. It could be the veteran, or it could be like the immediate family, so son, daughter, like that, the wife, the spouse, be connected to the veteran. The DD 214 is what we call it, and that's our basic transcript of and outlines our military career. And it says, yes, this person was dishonorably discharged, and here's a form. And then that's how you apply for all your veteran benefits outside of as well. You need to have that DD 214, which is, everybody says that's like, you need to make a copy of the DD 214 so you can go ahead and apply for anything in regards to veterans.
Okay. I hope that answers your question, Brother Sean. Brother Greg asks, as a part of your team, can you choose your title company?
I'm so proud of whoever asked that question. Who was it?
Brother Greg.
Brother Greg, kudos to you. Absolutely. And a lot of people do not know this. A lot of people do not know that whoever is picking and paying for title insurance get the choice of their title agent. It is not your agent's choice to make. However, a lot of people don't know that, so they allow their agents to make that decision, and that's okay too. But I will tell you, as a realtor, I'm going with the people that I always go with, Pensacola Heritage Title, or whomever that title agent may be, and it's because we have built a professional relationship and I trust them with my people. So I'm sending them that way. However, as a buyer or seller, whoever is, and it's in the contract, it's a check mark that your realtor makes. It's a negotiation tactic that the two parties, the seller and the buyer, make as part of that offer. Who's picking and paying for title insurance, and whoever is picking and paying has the choice of who their title agent is.
Brother George?
Yeah. So in addition to that, in regards to the title company, it's kind of a known thing as well. If you're listing, that means if you're selling your property, 9 times out of 10, the other realtor on the other side, the buyer's agent, they're going to expect you to come with a title company, because that's why, you know, you're listing it. It's almost like you get the first right, basically, to go ahead and, hey, this is part of my team. We have this title company. Now, if you're on the buyer's side, then it just flips. Then typically it's like, okay, well, I may come as a buyer's agent. I may come and says, well, you know what? I don't really want to work with your title company. I have this other title company. And like Ms. Ford says, we can go ahead and negotiate in the contract. So, well, okay, that's fine. My buyer will pay for the title insurance. So now can we use my title company? And it basically, because you've got that relationship and you've got that you know, professional relationship going with your title company. And once it comes down to crunch time, which a lot of people don't see, but a lot of closings, I mean, after a closing, I'm sleepy, I'm tired, I'm exhausted, because there's a lot of things that happen behind the scenes besides you just signing on the contract. There's so much stuff that goes, especially 3 days prior to the closing, There's so much stuff. There's so many fire drills that you're doing, and you want to make sure that you're dealing with somebody that's not going to be looking at their phone. The title company, they're not going to be looking at the phone like, oh my God, Smitty's calling me again. What does he want? You know, you want to have something like, oh, Smitty's calling me again. What kind of exceptions am I going to be able to do? I know what's going on. I'm going to give him some advice. He's going to give me some advice. So somebody that's really working as part of your team, you want to make sure that that is your title company.
Thank
Hope that
you.
answers.
Thank you. Now, since we've been on here, I heard the two of you guys talk about loans. Now, I heard you say, Brother George, as well as Ms. Ford, there are different types of loans. What are the different types and what are their benefits?
I know enough to be dangerous in regards to this because I'm not a lender, so I do know enough to be dangerous. So I've been in this business for 25 years now. So I've kind of come across all these type of loans. Obviously, you have the cash, right, loan. So that is what it is. Typically, with a cash loan, you can get an inspection done, but it's typically like it's just totally an as is. Like you're gonna go ahead and take the property as is, and this is the cash. Typically, there's no appraisal. You can get one done, but it's not required because you have cash. So if you're buying a home cash, all cash, you're actually the lender now. You put on your hat as a lender. So whatever requirements you want, that's what you make in a cash deal. So that's paying all cash. Then you have a conventional loan. So conventional loans are typically 20% down. But now they're getting a little fancy and got different price points of how much is the deposit that you have to put down. But typically, the old traditional conventional loan was for people that have the money. They don't have cash to buy it outright. But you know what? I've got about $200,000 cash. I would do the conventional loan, and I'm going to make it happen that way. So you have that conventional loan is what it's called. Then you have FHA loan. FHA loan is typically, you lean up first-time buyer, someone that doesn't have the capital. You can still have, $2 million in your account. But if you don't have the liquid cash to do this, you can still do an FHA loan. So let's not get this, twisted like you're going down the pecking order. No, it's just that you don't have that liquid cash to do a deal, so you can go to FHA loan. We've already talked about the VA loan as well. So you've got those types of loans. Did I miss anything, Ms. Ford?
No, I think you got it right. FHA loan, like you said, conventional loans is usually about 20% down payment on that house. And FHA is what, about 3.5% down? So there's a difference there as well. And again, with the cash transactions, what I'd like to just add to that is, like George said, when it comes to the inspections and stuff, it's really up to whoever is providing that cash. So that buyer, that cash buyer, you are now the lender. So now you have to set your own terms with inspections, with appraisals, with surveys. A lot of cash transactions I'm seeing lately they're not requiring a survey, and that is absolutely that person's choice. But don't skimp on the inspections. The inspections are important, and it's going to ensure that property that you're purchasing is the property that you're purchasing. The boundary lines are there. The rightful owner is there. So you just want to don't skimp on the inspections when it comes to cash deals.
So here's a question, and you both can answer this. I'm a college graduate, just got into my field, got a great job. Been renting all my life, but I'm tired of renting. I'm ready to step up and move into my house. What are my steps?
I think, again, the first step is going to be, because a person in that mindset is probably ridden around in a couple of neighborhoods and kind of scoped some things out, seen some for sale signs. They've gotten a warm and fuzzy about one particular area. the very next step is going to be to contact your local realtor. Don't try to do it alone, especially if this is your first time, because you have for sale by owners out there all day, every day. And they say, hey, I don't want to deal with the realtor. If you can, get a loan and come and see, they'll try to talk you out of trying to get a realtor. But the very first step is to contact a local realtor.
Yeah, I would say absolutely contact that local realtor, and then also go ahead and get connected with the lender.
Mhm.
Go ahead and get pre-qualified. So I'm going to talk small numbers here, but you may want a $5 house, but you actually only can afford a $3 house. Or you may have a $5 house, money for a $5 house, but you don't want to spend the $5. You just want a $3 house. So
Smart.
there's a lot of different variables there that you'll be dealing with. So you definitely want to get with a competent realtor. And I got to tell you this, I've run into that where somebody has said, I'm going to go buy a house, and I go to the house and I'm showing my client the house, and then the seller was like, well, I'm not paying any realtor fees. I'm not paying any realtor fees. I said, don't worry about it. Don't worry about it. I'm just going to do what I do.
Yeah.
Then halfway into the deal, I know I'm getting off topic a little bit, but halfway into the deal, the seller realized how much knowledge I had. And then he's like, wow, I need to get a realtor myself. Not only did he get a realtor, he hired me as a realtor.
You.
I was doing the buyer and the seller side of that, because he said, okay, you're legit. I'm not wasting my money here. Everybody's going to be safe. I'm going to go ahead and get a realtor. Because people don't realize that even if you have for sale by owners, meaning that owner wants to sell their own home by themselves and not use a realtor, they don't realize how much regulated paperwork there is and the procedures and things of that nature. If you don't do this stuff every day, you shouldn't try to do that. So they kind of get overwhelmed with, I can put it on the market, put a sign up. How hard is that? I don't need a realtor. But then all of a sudden you start getting these questions, and you start negotiating, and you start talking about grandfathering and this inspection, that, and all this other kind of stuff. And they're like, whoa, they get so overwhelmed, they realize, I really do need a realtor. So yeah, the first step is get with that realtor, and also to get, follow up and get with the lender. So you can have a realistic forecast of how close you are. You may think you're 6 months down the line, but you're 3 weeks away. You're actually closer than you thought, or you're 6 months away, and you're actually 6 years away, because there's something on here that impacts your credit or whatever, but you're a little bit ways away. So then you can get a realistic picture of your journey and the timeline of your journey, of this very expensive journey.
And to George's point, again, we talk about having that competent team. That realtor that you choose, 9 times out of 10 are going to have a list of different lenders already that they've worked with, that they know how, they know how they work. They know how they work, the lender work, and how the lender and the realtor work together. So they pretty much already know what the lender is going to call for. Again, that's going to be your competent realtor. They're going to have an arsenal of people and vendors that they already know who they're calling on when the time is right. So you want to get with the right realtor. That right realtor is going to have the right lender for you. They're going to know their lenders well enough. They know exactly what buyer to put with what lender. So your first step, get a competent realtor. And the second one is to, you and that lender reach out to that lender to get you pre-qualified or pre-approved.
Thank you. Brother Keno Beasley, his question is.
His name is Middleton too.
Sir, I'm sorry. Brother Keno Beasley question was, what are the pros and cons of a 100% financing home loan that most lenders are offering?
Well, obviously, again, this is a more lender, but I know enough to be dangerous in this. But obviously, 100% financing, you're not coming out of your pocket. You're not coming out of your pocket for the loan. Now, there is this thing, And most people don't realize that. They think the down payment of 100, I don't need that, and now I'm good to go. I can just show up at closing. No, the escrow, first of all, goes toward the loan. So there is an escrow deposit that's needed. So even though if you have a $5 house and you've contracted that house for $5, and they may say, well, you know what? To take this house off the market, we want $1 to go toward the escrow deposit. That's to show good faith that you're going to continue on the deal. That's the only way we're going to take this off the market is we want $1 up front, right? So now that dollar up front, that leaves you with like $4, right? So the $4 is the actual financing part. So you got your escrow over here, you got your $4 over here. That's 5, right? So you got 5. But there's one other thing over here, and it's basically the closing cost, which is totally factored outside of these 5 things. Your closing cost is totally separate. So even though you're doing 100% financing, you have to make sure that you have enough cash to close, because your closing costs can average anyway, depending on the size of the house. You know, I'm just throwing out some numbers, 5,000. I've seen it up to 15,000, and that's just your closing costs. That has nothing to do with the loan. That has to do with the county that you're in, the recording fee, the survey that you've done. So you got other things that were happening behind the scenes, and that's happening for the purchase of the home that has nothing to do with the financing. So you make sure you have enough cash to cover your closing costs. And then that's a great, the great pro there is like, hey, you can go ahead and do that. I can't really think of too many cons in regards to why you wouldn't do that. Other than of course you'll be paying it off longer. But even with 100% financing, you can always make extra payments to bring that down and things like that. So there's not really a con that I can think of. Most lenders are doing that now because a lot of people are qualifying for that. So you know what? That's building up their portfolio as a business. That's building that portfolio up for them overall to have these things. And some of them are actually quite just honestly are getting them out because it almost has to be like they've got 10% this type of loan and they got 10% over here. And they may have a requirement that at least 5% of their loans, because their board has discussed, say, hey, we want at least 5% to be 100% financing. So they offer that until that goes away, until that 5% goes away. But they offer that just because it's an internal qualification. But I don't think there's a bad thing to it at all. Ms. Ford?
I would just, there's not much that I can add to that, only to just reiterate that 100% financing doesn't mean that I go to the closing table and I have to pay nothing. There's inspections that most time have to be paid up front. Those can range, a survey alone can be about $450. It really just depends on the area, depends on the property. A home inspection can be anywhere from $350 to $500. That's something that may have to be paid up front. Some of these things can be paid at the closing table. But again, that's part of those closing costs that have to be paid. So I like to tell my buyers that, expect anywhere from like 2.5% to 3.5% of whatever that purchase price is to be that closing cost. So if you looking for a house that's, $100,000, about 2.5% to 3.5% of that $100,000 is what you're going to have to come up with out of your pocket before you actually get the keys to that house. So again, it's really about your team. It's about the team that you select, because you need to have somebody that's preparing you along the way, not 1 week out before we get ready to close, they dumping all this stuff on you. They should be telling you from day one, as you guys are working together, what this journey is going to look like.
And there's also, just to add on as well, there's also a second finger over here that goes with the closing costs, right? Is the preparation cost. Now that you have a house, you're a collegiate, and you got out of the dorm or you got out of the apartment. Now all of a sudden you got this house, and man, that grass looks great. Well, who's gonna cut it? Now you got to go buy. Now you got to go out there and you got an HOA. You may have that or whatever, but you have these other expenses that you don't really think about because you're living in a rentals world. So you're not thinking that as a home buyer. But now all of a sudden you got the utilities, and you can't turn on the utility. You can't turn off the utilities at your old house to move it to the new one because your stuff is still over there. So you do have some upfront costs in regards to utilities, just upkeep of the home. From it can be anything from cutting the grass to lawnmowers and all this other kind of stuff. So just make sure you have that extra cash. So just don't think 100% financing again that you will not have any type of expenses, and all you have to do is sign and drive, so to speak, on this tiny house. You're going to have those expenses.
Thank you. Brother Clexton Middleton actually wrote in the chat, recovering from financial difficulties. Buying a home after a bankruptcy, how long does one have to wait before buying a home, especially in a time where renting is more expensive now than mortgage?
Do we have any lenders on the phone? Are there any on the line? I mean, no. And I'll look to George on this one too, because I think it is it 2 years? It had to be discharged 2 years?
So on a typical loan, a typical lender, it has to be 2 years. Some of them even go down to 3 years. That has to be like, that's when it was discharged, that's when it was filed or whatever. So after that point, you can start doing that. However, there is good news, and you may want to write this down. There's an organization, and I'm not trying to take any lenders' money away from their pockets, but there's an organization. It's called NACA, N-A-C-A, and I'll put that in the chat. They are great. I'm trying to type and talk at the same time. So excuse me. So it's NACA.com. They are an organization that looks at everything that happened to you and said, well, that's fine, but we want to go from here forward. We want to go from shaking your hand as a potential home buyer and now go ahead and give you a map to get you into the house. We don't even care if you just did that bankruptcy yesterday. Okay. If it was, what's today? Wednesday? You filed it on Tuesday. You filed it last week. We don't care. NACA, we're going to go ahead and work with you. Going forward, we're going to go and we're going to scrub everything. We're going to go ahead and make sure you qualify over here.
You don't eat with your head on at the table.
Timeline in regards to, okay, even though you filed the bankruptcy or you had some discrepancies in your financial difficulties, okay, now you're ready to go. And there are more counselors, there are more coaches. They also work with realtors like myself, but you can easily contact them. You can look at their website if you want to. They don't even I don't think they even check your credit report. They just go forward. It's just always going forward, whatever's going forward. So again, if you go to an organization like that, that answers your question on that. But if you're dealing with a typical lender, they're going to tell you, oh, well, how long was that? Oh, okay, it was 10 years ago. Oh, yeah, you're good.
Good, yeah.
And some that would, and it's shortened up because at one time it was actually 7 years.
Right.
Then it's like when the market crashed and all this stuff started happening. Now you've got out of 10 people back in the day, one person probably filed bankruptcy. Now you turn it off and all this stuff starts happening with the market and all this turmoil and stuff like that. Now you got 9 people. You got 9 people filing bankruptcy, and only one person can qualify. So the banks had to get creative and say, we need to make programs for these folks because our business is giving loans. So we need to make some adjustments and make these programs and so forth. So there are lenders, again, it just depends on that lender. Some lenders still practice that way, and they give the exceptions or they give you a realistic timeline. And so that doesn't matter because now we have programs because they have to cater to the mass.
Right.
It's no longer, it's not a bad thing if you say, oh, I filed bankruptcy. Everybody says, oh my God, the 9 people look at you like, oh my God, what are you doing? Now you got 9 people. They're following it, and there's one person on the block may not have had it. So it's not necessarily a bad thing anymore, but the lender, you have to contact that lender. And if you get with that local realtor, the local realtor, right, will connect you with the title company. We'll connect you with that type of lender. Because you start having these conversations, and in my mind, I've already know, just like this court said, I would already know, oh, I'm going to have him go talk to lender A.
Mhm.
It's not going to work for him at
Yeah.
all. Linda
Yeah.
A all the time, and we've done this, and in crunch time, this has always happened. Oh, Linda A is a guru at this, so I'm going to move you over with Linda A. I'm going to recommend Linda A. You use whoever you want to use,
Right,
but
right.
that lender for a reason, and it's based on the information you share with me as a realtor.
Mhm. And I'll just add this too, because we talk a lot about lenders, because they're key. They're the ones with the money. Don't be afraid to go to your small local credit unions or mortgage banks in your area, in your neighborhood, to find out what type of programs they have, because I'm telling you, probably all of my buyers that come through me, I'm sending them straight to either a credit union or a small mortgage bank in our area, because they know the market. They're easier to talk to. I can get a phone call at 10 o'clock at night. In fact, I was up last night after we had our first meet and greet. I was up at 10 o'clock last night with my lender talking about a deal that closed today. Thank God, because we were up working. We were making it happen. So don't be afraid. You know, these big banks, yeah, they're okay. And I hope I'm not offending anybody that may work at one of these big banks, but it has been in my experience that the smaller banks, the local central, like the credit unions and things like that, those are the ones that are really kind of hand holding. You know, they're patient, they're more personable, and that's what you need throughout this journey in buying a house.
And that's a very good point there. And I'll also add that with this shopping for a lender, as I call it, right? You have those three that you've mentioned: the mortgage side, credit union, and you go to a big bank. You can actually shop at all three. And as long as you shop at all three and they pull your credit within 30 days of each other and they classify for
Yes,
buying only, it's not like
yes,
on your credit. It's only one hit. So that's a consumer protection that was added on, because everybody a while back, you know, you go out there and then you just go to that credit union and they pull your credit. Now you're like, I'm stuck, because if I go somewhere else and they pull my credit again, that's going to ding me. My credit score is going to go down even more.
Mhm.
No, I have that. I had an adverse checks on my credit. So you know what? As long as you do it within 30 days and they classify it as home buying, you're good to go.
Yeah.
Okay. We have a couple more questions. We have someone that wants to know what is the first time home buyers program?
So I think we talked about this last night too. I think I think some people may have a misconception of what the now today first time home buyers program is. Today, what qualifies you to be a first time home buyer is that you have not owned a home in 3 years. That's it. That is the qualification that makes you a first time home buyer. Whereas before, and George, I'm sure is going to speak to this, back in the day, you know, a first time home buyer truly meant this was your absolute first time buying a house. You have no history of owning a home. But now today, it is, you have not been a home owner within the last 3 years.
Okay. So we also have a question for Brother Sean Parker. He says, if I had settled on a home and closing in a month or so, my paid for a car has broke down and I have to finance another car, will the car purchase affect my closing on a home?
Absolutely.
Absolutely. Don't do it. Get on the bus, take an Uber, get a family member's car. Do not purchase anything during the process of buying a house. Don't do it.
You know, I had that, and just to kind of go off of Sean's question, I actually had that when I actually listed this property. And the property was a nice sized property, and it was big enough to put an RV on. And these people, sellers, they had an RV on there. So their buyers got all excited. A week before the closing, they went out and bought an RV to put inside their new shiny house, and all of a sudden that disqualified them. The house went back on the market. So there was no reverse on that. Do not freeze everything.
Don't do nothing. I will tell you this, and my heart goes out to her. She's still one of my very, very special clients, now friends, and I'm sure she wouldn't mind me sharing her experience. We got down to probably about, I think we were 4 days. I think we were 4 days out, 3 days out, because she had just gotten, so, and you'll learn through the process, there's certain rules and laws that that come into play when it comes to purchasing a home. But there's one rule that says within 3 days of the closing date, the lender has to provide the buyer with a preliminary closing disclosure, meaning all of the fees that had to be paid throughout this transaction and those fees that have to be paid at closing costs. So within 3 days, it's called the TRID rule. Within 3 days, that lender has to provide that buyer with a closing disclosure. My buyer got her closing disclosure and realized that she did not have her closing costs. We talked about this. You hear me talking about it every time I get a chance. I'm talking about it. I'm educating my buyers. We had talked about this. I don't know, for whatever reason, she thought that she could go out and take a personal loan for her closing costs and nobody was going to find out because we're 3 days out and nobody's going to go back and check. They are checking up to the day of closing to make sure that you have not done something that you were supposed to do. Like, no money has come into your account, no money has gone out of your account, and big money. And she went out and borrowed this money for closing costs. We get down to the day of closing and the lender said, we got a problem. What happened? Miss such and such went out and took out a loan for $8,000 and some odd dollars. It knocked her out. She can't qualify. However, this lender, smart, he has his things in place. He has different tactics and different things that he can do. He said, you know what? I got a plan. I'll call you back. He called me back within 2 hours and told me, you know what? I'm waiting to hear from your buyer. If she goes and does what I tell her to do, then we'll be able to close still today. She went out. Her mom ended up buying her car from her. So that took that expense that she had for her car loan that was already in place. She took it and sold it to her mom temporarily to get that particular debt off of her credit. They did a rapid rescore, saved the day. But not every lender is going to do that. Not every lender knows to do that. So again, it comes down to having that team of people, those people that can pull things out of the air and think of things to do in order to fix it. But to eliminate all that stress, just don't do it. No big purchases, no big, withdrawals from the bank. Don't tell your boyfriend or your wife or husband they can't send you $10,000. What? No, we can't do nothing until I close on this house, period.
And so the thing there too, right? If something was to happen, excuse me, if something was to happen like that, it is very, 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 I'm not going to stress this, very, very, very important that you have that conversation with your realtor. Guess what? I'm thinking about X. And that realtor is going to tell you, don't do it. Or you got to do it. Okay, maybe we get a workaround, but at least the realtor can get with the lender and they can have a head start on what's coming. Because if it's got to happen, it's like I live out in the country, my car doesn't work. I can't walk to work. There's no Uber out here. I just need to have that. Give me some answers. At least go to that realtor and that lender so we can give you some that won't disqualify you. If there's no options, then it is what it is. But at least you're going to go and you're going to be well educated on different options that are maybe possible for you. So you make sure you have that conversation. Keep it all in. Don't keep it all in. Just show up at closing, and your realtor is looking like, wait, you bought what? Wait, you did what? Oh, I forgot to tell you. Yeah.
And that's a good point. You know, there may be, if it is a dire emergency and there's no other way around it, you have that conversation with your lender, and that way they can factor things in and move things around and figure it out for you. They are there. You are paying them to do a job. There's a lot of fees that go to these lenders: origination fee, application fee, made up fees, BS fees that you're going to see that they just put all in there. You have to pay that money. You're paying them. So talk to them, let them advise you, let them lead you.
So, thank you. So another question is, when buying the house, am I the boss?
Okay, I can take that one. Absolutely. You're the boss. So what I tell all my clients, and I've just had this actually happen this week, I'm going to fully educate you. And if you just still going to sit up there and say, man, the sky is red, and I can't convince you, everything, all the facts I've laid out, and you want to continue to say the sky is red, then I'm going to say, okay, sky is red. These are going to be your consequences. Now, all of a sudden, we're going to get into consequences kind of thing. So you may come in as the boss, but you have to be open to listen to the professional. You know, you got to be able to open, and again, we're gonna sit down, and I'm gonna talk about all the coincidences that can happen. If you do that, then this is gonna happen. 9 times out of 10, this is gonna happen. Or I've done this before. You know, this happened, 6 years ago with another client. I'm gonna give you all this information, and your mind just tells you, no, the sky is not blue, and you want to go with that. I'm gonna say, well, okay, well, this is what typically is what's gonna happen. Do you still want to proceed that way? You do the same thing as I do the same thing as a listing agent when I list the homes.
Mm-hmm.
My house is worth $1.5 million. 1.5. I said, the market is value of this is 300,000, sir. I'm sorry. I just. And he said, well, no, I'm stubborn. I want to list it at $1.2 million. That's fine, sir. We can go ahead and list that, but I'm going to tell you, I wouldn't list it because I have a track record. And that's another thing. Your realtor should be actually studying the other realtor as well. But I have a track record to protect, and I don't overprice too much of anything. So first of all, my realtor friends are going to call me up like, Smitty, are you okay? We need to do a wellness check on you because this is something you don't even do. That's going to be the first thing. The second thing is you just got to be willing. Your home is going to sit on the market for probably 1 million years. So as long as you know that, we're good. Okay.
As a realtor, we work for the client, whether we're listing a property or whether we're purchasing a property, we work for the client. We are here to give you the facts, the hard facts. We're here to give you, like George said, the pros and the cons. But at the end of the day, it is your decision to make. And I tell them, listen, here are the facts. These are the comps. This is the benefit of doing a survey versus not doing a survey, or this is, we're here to give you the facts. But at the end of the day, we work for you, and it is your decision, but we give you enough information to hopefully make a rational decision on what the next step is. And to George's point, I've listed a home before, and it really wasn't, I really didn't want to list it at that point, at that price point. I thought we were a little too high, but like I told him, I said, these are the comps and this is my threshold. I wouldn't really list this house over this price. Oh, I just want to go up $5,000 more dollars. Okay, we can do that, but let's put in a plan that says, okay, if it doesn't sell within 2 weeks, then we're going to reduce the price by $5,000 and come back down to my price point. And then you get that in writing, everybody signs off, and that's your plan. So you always want to give them options. If not this, then we can do this. But then again, to George's point, sometimes the realtor and the client just don't match. They can't connect. And it's really important to have that connection. I have passed on clients to other brokers in my office, because sometimes it's just a personality thing. I think I get along with everybody, but not everybody get along with me. So, and that's okay. But again, you have another plan. Hey, You and I are not connecting for whatever reason. It's no hard feelings, but I do have another, agent friend that I can refer you to, and maybe you two can have, a better conversation than you and I can.
Thank you. So I know time struck here. We kind of started a little later waiting on people. I do have two more questions, and then, if that's okay, Brother Sean.
Hey, let's go. This is a great conversation.
Okay. So another question hit in the chat. It says, does SHIPP exist? SHIP, does that exist?
SHIP does exist. SHIP is a program oftentimes for first-time home buyers. It provides assistance towards closing costs or down payments. I think in this area, the max is $7,500. But the thing to know about SHIP and some of these other programs that assist with closing costs or down payments is sometimes those assistance have to be paid back. Sometimes it acts as a second mortgage. So, and it'll say in the guidelines, if you remain in this home for X amount of years, then that payment is forgiven. But if you sell your home before this time, then that loan has to be paid back. So a lot of people don't understand that. And it's important that any of the first-time home buyer programs or closing cost assistance, that you just really understand the rules and what it takes to secure that actual assistance or second mortgage, because it does act, a lot of them act as a second mortgage.
Thank you. You wanted to clarify something or say something, Brother George?
No, I just said bullseye. Absolutely, it does exist. I do remember, again, back in the day, they actually had, again, it's always about reading that agreement, but they actually had, and so does NACA, kind of work with this a little bit on some of their agreements with their client being the buyer. It's actually specified like in which area you can buy as well. Not so much now, but back in the day, that was a major component of like, okay, well, you get this SHIP or you can do this NACA, but you can only buy in this zip code, XYZ zip code, in order to qualify for that. But now the majority of that has gone away. But you just have to be, again, if you don't know the question you're asking and you don't know what to look for, that's why you need to have a realtor, because then a realtor be like, oh, you're gonna go with that. Oh, let's go ahead and check, paragraph 12, because that one actually, it's a form, and paragraph 12 always addresses, the SHIP, so we know where to look in the contract. Absolutely.
Okay. So we have another question by Zanny Mount. And it reads, down the road, may be interested in getting a home equity lock or home equity loan. How do I find out my home's value?
So again, you got a local realtor that you like. A lot of times they can run comparable analysis to determine what the market value of your home is. But again, realtors are not appraisers, so they can run comps based off of recent sales in that area within a mile, maybe within the last 6 months. But in order to, what the lender who is going to provide you with a HELOC or with a home equity line of credit, what they're going to go off is the appraisal. So you want to get with your local lender, talk to them about the HELOC programs that they may have. And again, you can get kind of an idea of what your home may be worth by having a local realtor do a comparable analysis for you. But again, at the end of the day, the lender is going to lean on that appraisal value, that certified appraisal report from a certified appraiser on what the market value of that home is. But we can give you an idea.
we can give you an idea, and it also helps you in this regard, Brother Mountain. It actually helps you for someone like us to do that because you can get it appraised, and so an appraiser is that individual's point of view on that day at that time, and they may not or may have ran the comps and come up with this, and they've divided one and carried it two and all this other kind of stuff, but they forgot to multiply it by 3, and you have a comp that shows them they should have multiplied that at least by 3, and now the value of the home is going to go higher, and they can change their report. So what I'm trying to say is, even though they do the appraisal report, the appraiser comes and does that, you also have you can appeal, right, that appraisal. You can appeal that, and they say, okay, what are you appealing it based on? You're like, oh, because my realtor had gave me 5 homes, and all of them had granite tops, all of them had the same finishing and everything like that, and they priced my house around $500,000. And this guy come over here, this lady came over here, and now she's saying it's $425,000. That's a $75,000 swing. I'm not getting that. And then they would take those comps, because it's public record, right? It's legit. They would take the comp, send it out to that appraiser, and like, reconsider your report now based on these findings. They may say, yep, I saw that house. Oh wow, yeah, I didn't even see those five homes.
Mhm.
When I those 5 homes were still pending. They didn't even sell yet. Like, okay, yep, yeah, I go ahead, and now they make the adjustment, and now it's 500,000. So just have that.
Again, you want to do your homework. You want to make sure that
Hey,
you
Brother
knowing.
Dante,
Uh-oh.
real quick, we are over the 8 o'clock hour.
Oh.
But I will tell you, this is a great conversation, and as long as everybody is okay, and because we got questions keep coming in, if you're okay with still talking, we'll keep it going.
Let's roll.
Let's roll.
I was just going to ask, you always want to be educated going into whatever situation you're going into. You don't want to just depend on that one person's opinion about what it is, because George hit it on the nail. Appraisers are still giving their opinion about the situation. That report is very subjective. Although they do have, they have some facts there. They do have some facts, but I remember having an appraisal put on his report that we were in a buyer's market. And I was like, what is your definition of a buyer's market? Because we haven't been in a buyer's market in quite some time now, nationwide. And we ended up winning that appeal. I mean, it was just that comment, but that comment went to my buyers. And my buyers looked at this report saying, wait a minute, you've been telling us it's a seller's market. Are you telling me that, you lied to us and, just to get us to do this, that, and the other? And that wasn't the case at all. So we ended up winning the appeal. It was just a comment, but it was a very damaging comment that was made on the report. And it made my buyers feel like they got taken advantage of when they really didn't. So you always want to know. You want to know at least a little bit about the situation. You don't want to go into a situation blind, and that's when your realtor can be of some assistance to you.
As well as your realtor, being able to read the actual appraisal report, like Ms. Ford just said. Some realtors, they don't do that. Some of them just like, okay, we're good. But when you get the realtor that actually dives into that type of stuff and understands the codes and what do you mean condition 4? No, this house, qualifies for condition 3, which is not a $10,000 swing on the price, and you get the right realtors that's asking the right questions that you wouldn't know as as just a normal person, owning a home, you won't know these questions to be asking. So you just have to make sure, again, you get that team together.
I see a hand up from Eric Moore. Eric
is muted.
Another question in the chat as well.
We'll come back to Eric Moore. We had another question in the chat. It says from Brother Greg, he wants to know what happens when the appraisal is less than the asking price, will that kill the deal?
We got to do this one real quick. So with this one, a couple of things can happen. Yes, it could kill the deal. The other thing is, well, if you have, again, a $5 house and it only appraises $4 and you still want to get this house, then you haven't come up with that extra dollar. So that dollar does not count toward the finance or anything like that. You're paying more. You're paying more. Even though the house only appraised for $4, you say, you know what, bank, I'm only going to hold you to the $4 that you promised you're going to give me based on the $4 price. But you know what? I'll go ahead and pay that extra dollar so I can bring it up to $5 myself for the seller to receive the whole $5. That's one thing. Another thing now is they kind of got a little tricky with some of this stuff where they actually had it where the appraisal contingency is basically with a VA and a FHA, because we talk about protection, right? With VA and FHA and VA contract, which we call as the offer. That appraisal can has to bring the price down to the appraised value, or the seller can cancel the contract and you get all your money back and you start somewhere else. So it can kill the deal in that regard. But again, if the seller is willing to bring the price down to $4, now he said, okay, it was appraised at that. Yeah, it was a little high. We took a shot at it. It only appraised for $4. We were trying to sell it for $5. Got off for $5. Guess what? We're going to bring it down to $4. And so the deal will continue to go on. A lot of the investors in today's market, they were actually trying to basically say, you know what, we're gonna pay, even if we're gonna pay the $5. We're just gonna pay $5. We don't invest. So you can see in today's market, a lot of people, we talk about bidding wars, you were getting with investors that was willing to pay that $5 bang every time. Now it's like me, that's not an investor. I want to live in the house. I don't want to rent it. That's not my plan. To live in the house, make it a primary home. Now I'm going against all these investors with these bidding wars. Well, kind of changed some of things with the COVID, because now all of a sudden that rental income that they were banking on, right, in the state of Florida anyway, the rental income they were banking on, these people were getting qualified, moving the house, and then not paying the rent because Florida, you can't evict anybody. The investors get that word out and they say, well, we don't want to play this game anymore. We're not going to buy homes if somebody's going to qualify for that. We can't evict them for non-payment. And they're sitting at that house for months, you know, until the state go ahead and lifts that, and they just extended it out actually to the end of the year. I hope that answers your question.
So one other question, when closing on a house, if during the inspection, they find out that the house has termites, who has to pay to get that filled or fixed? What happens there?
I think it's a negotiation tactic, if you will. Ultimately, the buyer is going to pay for that, what we call a WDO, wood destroying organism report. So the termite inspector or the pest inspection is going to go out, they're inspecting for termites. And if they determine that termites are there, there can be a number of different things that happen. We present this information to the seller and said, hey, you got termites. There needs to be a termite, you need to go in there and kill the termite. There needs to be a termite treatment. And a lot of those termite treatments cost like $700, $800. You can negotiate that in the deal where the seller actually pays it. Y'all split the cost. The seller gives a credit to the buyer for that cost. It's all a part of that deal or making that deal. But that's why it's important to get your inspections and keep up with that timeline too, because I think a lot of people have lost out on deposits because either the realtor failed to keep a time watch on that inspection period or whatever the case was. But you want to pay close attention to those dates because you may have 10 days, 15 days, 7 days to do an inspection. You need to get those people out there in that house, inspecting that house so that you know exactly what the condition is of that house. But again, to your point, if there are termites and there needs to be a termite treatment, that bill can be negotiated, whether it's the seller paying for it or the buyer paying for it, or you're splitting the cost. The inspection, the initial inspection is usually the cost of the buyers. But the treatment of those termites can be negotiated.
And my 2 cents on in regards to that. In addition to that, right, Ms. Ford mentioned it, it's about the timing. So you get that inspection, say, you know, different inspection periods. It's not just one flat out period, like you get 10 days. You can get 3 days inspection period. You can get 5 days. You can get 14 days. You can get 15 days. If you do that, the key thing to remember, if you have a 15-day inspection period in the state of Florida, you can cancel that contract for whatever reason you want. It just says, if the house no longer meets my standards, and you get all the money back within that 15 days. So it would be great for you to go ahead and get the house inspected on the front of that inspection period, because then you have some room to negotiate, right, with the seller, because now the seller, you're going to them say, well, if you're not going to fix the termite, I'm still within the inspection period. I'm just going to cancel.
Absolutely.
Oh, yeah, oh, wait, don't go nowhere. We'll pay for that. We'll pay for this, and so with that inspection, along with other things outside of being termites, it may be something that in the house that needs to be fixed. Make sure you go ahead and negotiate that kind of stuff within the inspection period, because on the day, all that goes away. Now you got the leverage to the listing. It went all the way over. So the 15 days for the inspection period on the buyer side, they have more leverage in regards to negotiating fee. After the inspection period, you're at the mercy of the seller.
Thank you. So last question of the night. Let's say that we've made this agreement for this house. Everything is signed, but a natural disaster happens. Storm, hurricane hits. The seller says, I want to stay in this house. It's a storm. I can't move into my other house. Me as the buyer, can I charge them rent while they're in that house?
No. So I'll answer this one as well. So in the state of Florida, any state in this whole nation, no one can make you sell your house. There's consequences of you backing out of a deal and refunds that you're going to give, the title company is going to give back to the buyer. But you can be at the closing table and it's not even a natural disaster. You just decided, you know what? I don't want to sell my house today. They be like, okay, well, this and that. Well, okay, well, go ahead and refund all that. So it's not anything that they can come and try to sue or they can try to rent. First of all, with that question that you just gave, you're not the owner of the house yet. So you can't charge rent on something that you don't own. You're not physically the owner of the house yet until you close. And typically what does happen, though, I can tell you what does happen when it is a natural disaster, we're in that state with all the hurricanes, everything is halted. All the closing
time is told.
It depends on if your area was declared a natural disaster area, you know, emergency area. Now all of a sudden you got to go out and get the house re-inspected. It wasn't the was so out of inspect. We got to get it re-inspected now because we don't know if the roof is still on the house.
Yep.
So you got all other moving parts that could happen. But to answer your question, if you can charge rent, the answer is no, because you're not even the owner of the house yet. So that's
And just to piggyback off of that, just because it's the last question of the night, again, it comes down to what's inside that contract, and only a realtor is going to know what's inside that contract, and that is by law. If there is a natural disaster in that area, then that time is told. The time stops, the clock stops, and it does not convene until I think it's is it 10 days? Now I'm telling on myself. There's a time period, and it is in that contract of when that time actually restarts. I think it's like 3 days, maybe 3 days after the natural disaster has cleared the area. But it is a part of that contract, and it would behoove anybody to get a local realtor and to guide them through this process. Don't try to do it on your own.
Thank you. I do want to thank you guys for all the questions and answers. I want to give Ms. Ford and Smitty, Brother Smitty, as well as Brother Sean Parker, a hand clap for putting this thing on. Thank you guys. Thank you guys. Before we leave, if they had any more questions, is there a contact
Could I have
number
one?
that they can get in touch with you?
Hey, that's Eric Moore right there.
Okay.
Yes, I just wanted to slide real quick. Is there any time an inspection is the law? Like for a loan? Because I've heard that some sellers and buyers forego the inspection to be expedient on the sale of the property.
To answer your question, I think I heard you right. Could you actually forego an inspection by law? Is that what I heard?
I'm saying, is there a law that you have to have an inspection?
Oh.
Can
No.
you forego it between the buyer and the seller?
You absolutely can. It's all a part of the contract. If you, the buyer, decide for whatever reason, I wouldn't agree to it, but if you decide that, hey, I don't even need an inspection, these things have happened, especially with cash buyers. They're like, you know what? I don't want to get an appraisal. I don't want to get a survey. I don't want to get inspections. I just want the house. Here's your cash. Let's go. You absolutely can do that. It is up to those parties within that transaction, namely the buyer, because this is the buyer's transaction. They're the one that's wanting the house. If they don't want an inspection, they do not have to get an inspection. Well, I will tell for a cash buyer. Now, if you're talking about a loan, a lender, the lender is going to require an inspection to be done. Let me reiterate that. If you are taking out a loan, a lender is going to require that all inspections are done. Survey, home inspection, termite inspection, survey, appraisal, all of those inspections are going to be done if you're getting a loan. If you are a cash buyer, that's when you have the option of choosing whether you want to do those inspections or not.
Thank you very much.
Okay. I wanted to make sure that anyone that has any other questions, is there any way to get in touch with you, Ms. Ford or Brother George?
Absolutely. I'm on Facebook. My name is Cicely Ford in Pensacola, Florida. My email address is cicelyford@phtitle.com. That is my email address, the title where these days I'm there Monday through Friday. So you could probably reach me there quicker. You can reach me by cell phone, 850-733-7337 is my business cell phone.
Me, I'll give you my direct phone number. 407-760-8204 is my cell phone number. Contact me anytime. Even if you're working with another realtor, I don't care. If you have a question, especially if you're getting a home buying type of flavor, and you get that, all of a sudden you start seeing stuff on the news, hearing conversations, and you have a burning question, go ahead and feel free to text me that question, and I'll answer it the best that I can, even if I'm your realtor or not. but I'm also on Facebook, and on Facebook, of course, is George Smitty, in parentheses, Smith. And I actually do I do not a podcast, but I do a broadcast every Thursday, and it's called Telling the Truth Thursday with the Big Closers. They call me the big closer in the business, but it's Telling the Truth Thursdays with the Big Closer, and I go everything from the beginning all the way to the end. I've got videos in there. I keep the videos in there because they don't change unless the law changes. Then I will change the video, but I have historically like videos in there where you can just click on a video and look at it at your leisure. Otherwise, on my regular personal Facebook, it is George, and it's Smitty the Realtor. It's probably easy to type in Smitty the Realtor to get either one, but that's how you can get me on Facebook, or give me a call, 407-760-8204.
Thank you, guys. I yield to you, Brother State Director.
A bigger and better business. I ain't there yet.
That's right.
I don't want Ruben's job right now. Hey, listen, wealth of information, and gentlemen and ladies, if you had an opportunity to get on the call last night with us four, man, we talked and talked and talked and talked. It is so much information that's out there that we don't really know. And we have the professionals here that provide that for us. So what we're going to do is we are going to have this as part of our Brotherhood Enrichment series, as we're going to have a part 2. Ms. Ford, are you ready for a part 2?
I'm ready for part 2 and 3 and 4, because there is a lot of information. I'd love to get some lenders on the call. Let's talk about the entire process, some other vendors, some appraisers, some inspectors. Let's get everybody involved, because knowledge is key, and knowledge is power. And for a long time, I feel like our people have not had all the information in front of them. And now it's a different time. It's a different season, and it's time for us to, those that can, educate our people, and those that don't know, come, let's join together. Let's learn together. Let's move forward. Let's move our families forward.
Yes, ma'am. Thank you. Brother Smith, you in your zone, man. I see you in your zone. Hey, man, I appreciate it, man. And listen, we have a lot of guys, a lot of brothers that are in this field. Just here in Pensacola, I can think of one off the top of my head, Chris King, a young guy. He's doing his thing right now. And so what I want to do is I want to make sure that everybody gets all the information. And so what we'll do is we'll coming soon, we'll have part 2, home buying series. And we'll invite Ms. Ford and also Brother Smith, and maybe we can get some other guys on, some insurance agents on the phone, and some credit guys. I got a credit guy in mind. I got him in mind. And let's see if we can make this discussion even more. Maybe we're gonna go over an hour. Maybe we'll schedule more than an hour. We'll schedule more than an hour, because this is really important. So further ado, I want to thank each and every last one of my brothers and my sisters that made this call. This is important. What we have in the state of Florida is a true brotherhood, sisterhood. And so we want to unite the state of Florida across from Escambia County down to Monroe County. Over to Duval County as well. So we want to make sure that everybody is involved. And with that being said, Brother State Director.
Okay.
Wow, what can I say? What an amazing night. I want to thank our panelists there for giving such great information. I mean, I bought my house, but I'm still learning stuff. I mean, I'm just like, whoa. And brother, I'm gonna let y'all know when they talk about them closing costs. Yeah, them things snuck up on me. I ain't even gonna lie. I had to borrow a couple $100 from some people, but you know, it was off the records, off the book. So, you know, that's just between us. Don't tell nobody. Anyway, I want to thank you all again for being out here. Thank the brothers and sisters for being on the call. Brother Parker, outstanding job, bro. If y'all don't know, Brother Parker has just been placed into this position just a little over a month ago, and he hit the ground running. And this is an outstanding event. I appreciate you, my brother, all the hard work you put into it. And that's it. I'm looking forward to the next one. Everybody, I appreciate y'all. God bless you. Good night.
Good night, everyone. Go Mob.
Go Mob!
Oh my.
Go Mob.
Go Mob!
Go, Mom.